Hello everybody, it's Yashar here, back again with another video, and in this video I'm going to talk about 3 different ways to gain exposure to crypto in your portfolio. Crypto markets has 2 very distinct features in my opinion. The first one is that the price of all cryptocurrencies and tokens move with Bitcoin. Here you can see the Bitcoin price chart and the price chart of 3 different altcoins including Ethereum, Polkadot, and Solana. Of course, each individual coin moves more dramatic to the upside or downside, but the overall movement direction is completely correlated with Bitcoin. The second feature is that crypto market is cyclical, and in that regard is pretty much like commodities. It comes with strong bull markets where the price of Bitcoin and other cryptocurrencies explodes and goes higher and higher exponentially, and then it comes with the bust and bear markets where the price of all crypto falls rapidly in a short period of time. Like all other commodities, they are also susceptible to extended period of no significant price action, which in crypto is called crypto winter. Despite extreme volatility and lack of clear method to truly evaluate cryptocurrencies, blockchain technology is here to stay, and Bitcoin was the best performing assets of the last 2 years. As such, a lot of investors, even billionaires, want to gain exposure to this crypto space. To name a few, Kevin O'Leary and Mark Cuban from Shark Tank, Ray Dalio, and of course Elon Musk are few billionaires who invested a portion of their portfolio in crypto. I personally invest about 5 to 10% of my portfolio in crypto to gain exposure to this space, and it worked out very well for me in the past. In this video, I will review 3 different ways to gain exposure to the crypto space, and in this example, I only focus on Bitcoin as the market leader. Before starting the video, I want to emphasize that I'm not a financial advisor, and this video is not a financial advice for you to buy, hold, or sell stocks or crypto. This is just my personal opinion, and you should always do your own research before making any financial decision. With that being said, let's start the video. Okay, so here we want to analyze pros and cons of 3 different methods to gain exposure to Bitcoin and crypto space. The first method is to buy Bitcoin directly from a local exchange. In Canada, you can buy Bitcoin and other cryptocurrencies from various Canadian exchanges. My favorite Canadian crypto exchanges are ShakePay, Wealthsimple, and Newton. I prefer ShakePay personally as there is no fee to fund your account or withdraw your crypto from the exchange, and you can earn free Bitcoin by just shaking your phone every single day, which is absolutely crazy. They also have a debit Visa card where you can earn Bitcoin as cashback by spending your money basically on all stores around the Canada. I will leave a link to ShakePay in the description box of the video where you can earn $30 in Bitcoin immediately by signing up and funding your account. And then you can earn free Bitcoin every day by shaking your phone. Anyway, pros of buying Bitcoin directly. Of course, you can own your crypto in your personal wallet, which is of course more secure. You can earn interest on your Bitcoin and cryptocurrencies by holding them in centralized finance platforms like BlockFi, Celsius, or Nexo, or decentralized finance platforms like Aave and SushiSwap. You can take out crypto-backed loans with less than 2% interest from platforms like, as I mentioned, Celsius, Nexo, and BlockFi, or from DeFi platforms like Aave. And finally, you can transfer your crypto with nearly zero fees to your family and friends anywhere in the world in few seconds. These are the pros of buying the Bitcoin or crypto directly. And now I want to focus on what are the cons of buying the Bitcoin directly. If every transaction is of course taxable, even if you convert your Bitcoin to other cryptocurrencies. And you cannot hold your crypto and Bitcoin in registered accounts like TFSA or RRSP. And of course, it needs a little bit of research, and particularly working with DeFi platforms like Aave and SushiSwap, it has a learning curve. So yeah, you need a little bit of research on that regard as well. The second method is buying a crypto ETF like a Bitcoin ETF. For example, we have a few Bitcoin ETFs here in Canada. As an example, we have Purpose Bitcoin ETF with ticker symbol BTCC and Galaxy Bitcoin ETF with ticker symbol BTCX. You can easily buy these ETFs from your regular brokerages like Wealthsimple Trade, Quest Trade, TD Direct Investment Account, or Scotia iTrade. Let's see what are the advantages and disadvantages of owning a Bitcoin ETF instead of Bitcoin itself. You can hold Bitcoin ETF in your registered account like TFSA and RRSP and shelter your gains from taxes. This is the main advantage of buying a Bitcoin ETF. And there is no additional research needed in this case, of course. However, on the downside, you will pay a small management fee for these ETFs. The management fee for these, basically the Canadian Bitcoin ETFs, are between 0.4 to 1.5%. There is no trading allowed on weekends on these ETFs when crypto market usually tends to move more dramatically during weekends. And of course, you cannot earn interest or take a loan against your crypto or use your crypto for payments when you buy a Bitcoin ETF. So these are the downsides of buying a Bitcoin ETF. The last methods to gain exposure to crypto and Bitcoin space is to buy the stock of crypto miner companies. In Canada, we have strong and large crypto mining companies like Hut 8, Bitfarms, and Hive Blockchain Technology. Buying crypto miners versus crypto or crypto ETFs is like buying crypto on a margin account. So you have absolutely better returns in a bull market. Here you can see the returns of Hut 8 mining company versus Bitcoin in the last year. And it is obvious that while Hut 8 follows the same trend as Bitcoin, it had more dramatic fluctuations compared to the Bitcoin price. You can also hold Bitcoin miner stocks in your registered accounts like TFSA or RSP, which is great. However, on the downside, on the negative side, you absolutely have more risk in the bear markets. You also have the risk of share dilutions, which these crypto miner companies do this like there is no tomorrow. They absolutely dilute shareholders here and there to buy new miners and fund their operations. You can also have the risk of mismanagement of the company itself on top of the cyclical behavior of crypto markets, which all in all leads to even more volatility in the share price of crypto miners. There you are, guys. These were 3 different methods to gain exposure to crypto space in Canada by buying crypto itself, buying crypto ETFs, or buying crypto miners. I would say if you don't mind holding your crypto outside of your registered accounts, it's always better to buy crypto and other cryptocurrencies, buy Bitcoin and other cryptocurrencies directly and own them, as they come with more advantages like earning interest and having access to crypto-backed loans and credit cards. If you don't want to learn much about crypto, or if you absolutely want to hold them in your registered accounts, then yes, by all means, crypto ETFs can be a good solution. And finally, if you want to trade other than investing, and if you want more dramatic swings to the upside and downsides while taking extra risk, then crypto miners can be your best bet. I personally buy and hold cryptocurrencies in my own wallet or on centralized finance platforms like Celsius and earning 3 to 9% interest on my cryptos. And I would avoid crypto miner as they are appropriate for traders and not investors in my opinion. I hope you enjoyed the video. I know it was a little bit long, but I tried to go over everything I know. If you enjoyed the video, please consider subscribing to the channel to see similar videos, and thank you for watching, and I see you in the next video. Farewell.